31st January, Tuesday, I'm finally back. Alright, after 4 or 5 days of severe gastric flu, gout. Oh my goodness, it was terrible. Fever went high and everything went wrong. Body ache. Guys, it was really an incredible time for me, and this is something that I really did enjoy. But thank you guys for all the kind concern and messages and understanding. Really appreciate that. Thank you once again for the great understanding here. Alright guys, I have a blockbuster video prepared for you because I've been collecting the data over the last few days, even though I was down, because I really want to present you this very important video for this month. So watch this all the way and you will definitely get some gold nuggets from here, because I think there's a possibility that the 08-09 crisis is going to repeat once again. Alright, so this is going to be big, so watch this with great view over here and make your risk assessment. And thank you AIMS for the kind sponsorship. Now, first of all, let's recap what happened last night. The Dow Jones lost 260 points, Nasdaq down by 254 points, and S&P down by 52 points. And of course, Tesla came down 6%. In fact, yesterday, I was texting the people, those who are in my I'll follow you group chat, they know that I gave a sell call on Tesla, alright? I gave a sell call on Tesla, and I said that Tesla will be coming down, and it's really happening right now. And of course, across the board, Microsoft, Google, Apple, Amazon, all were down. Why? Because I told you guys the buyback program is over, hence therefore profit taking is coming in. But of course, there are many other good reasons, and let me show you right now. Now, the Dow shed more than 250 points after the 6 days winning streak, so it's time to take profit. So information says that, right, all the mega tech stock like Meta, Alphabet was down by 3% to 2.5%, semiconductor down by 3.9%, and Forbes shares down by 2.9% after they say that they'll be cutting price like what is Tesla is doing right now. So if everybody's cutting prices, yes, it may increase demand, but it will reduce revenue. And if costs retain, then we have a problem. This is something that is not too difficult to understand, right? And of course, with more than 20% of the S&P 500 coming out reports this week, it's going to be a big one. McDonald's, General Motors, Apple, Meta, Amazon, Alphabet, all will be coming out, and I think that Amazon and Apple may not be doing well, and Alphabet too. So we do also have the FOMC meeting this coming Tuesday and Wednesday, and of course everyone is expecting a 0.25 percentage point hike. Now, I would not want to fight the crowd because everybody says 25 basis point, but I would prefer the Federal Reserve to go 50 basis point so that things can be faster, get it done over it. But if they do 25 basis point, then it's going to be a problem, because most likely they'll say be 25 plus 25 plus 25, which amount to be 75 basis point, because I still think that the number that we're going for is 5.25%. But when this all happen, what will happen to the mortgage rate? It will go much higher. I'll come back to this later. So the thing is this, to me, is one of the primary reasons why the market came off is because the greed. Now, the fear and greed index, the last time I used it was some time ago, and now it's back again as we are at the greed level, alright? So what is greed? Greed means this, okay, when things get expensive, when people start thinking that it's time to buy, they're going to be very careful. Now, this is from CNN, and you can see over here right now, the current index now trading at 67. Yesterday was about 74. Let's take a look here itself. Yesterday, or 69 yesterday. So it's like the previous day was 74, in fact. Okay, the timeline itself I'll show you later, but let's just see how it gathered the information. So you can see now the S&P 500 versus the 125 moving average. You can see right now we are now off from the 125 moving average by about 100 points. So it is possible to see S&P 500 pulling back 100 points from where we are right now. And of course, the stock price now, the strength is at the highest level since January last year until now. So this means that the net 52 weeks high and low now is at an all-time high from last year until now. So the thing is this, that means that, right, is not a good sign at all. This is the highest level since 2022, and remember in 2022 we have the market at the all-time high level, right? So this is not a good sign at all. And market breadth, oh my goodness, this is the Michelin market breadth. You can see that again compared to January 2022, we are at the highest level now. So think about this, guys. We have a problem here, and because of that, the put call option now is the lowest level, because why? People are getting complacent. They believe that the market is going to go up. So all these information tells me that we got to be very careful, and even the VIX itself is trading at below 20 for some time. And if what we are seeing right now is going to happen, then the VIX is most probably going to go higher. And of course now the 20-day stock and bond returns are still trading at the pretty low end. So that means that the stock market is actually the one moving up and historically. And of course the junk bond demand is steadily increasing 2%. That means that more and more people are trying to buy something that is dangerous, higher asset class risk, so higher risk asset class, and that is not a good sign at all. So last but not least itself, right, let's look at this right now on my chart. This is the what happened back in August the 12th, my birthday, and of course 30th November last year. And now let's take a look with the fear and greed. Whenever it hit about 69, 70, every time when it hit the top level, as you can see over here, once it hit the top level, the market basically is a near term of selling potential. Can you see that? So what we have right here was somewhere here on the 30th of November, and the market came off. So if you ask me right now, I do suspect that we can see the market coming down at least by 2,000 points. So that means that the Dow Jones can see 32,300 level in the near term. So traders, are you ready for that? Because if you look at the screen over here, every time when the RSI and the moving average cross over, we do see a pullback. So I believe that the Dow Jones is going to see another 1,500 points pullback in the near term. All right, so let's see whether what I shared today will manifest. All right, so the thing is this, we do know that now the profit sentiment warning is there, because now you can see analysts are cutting earnings estimate for corporate America, and it's cutting down, and it is all the way since June, so last year. So all these speaks volume, and I think that this will actually reflect very clearly for the stock market. Now, the China situation now is not getting any better. This was something I was supposed to send you last week, but I still decided to upload it because you can see that now in China, everybody are very unhappy crossing the Chinese New Year, because now all the streets itself is full of chrysanthemums, because chrysanthemums is more used for prayers and remembrance of people they lost, and it's not a good sign. And I always strongly believe this: if China is not going to do well, it will be a bigger problem, and you'll hit the entire global market. And of course, people argue with me, but Kel, the GDP number was better, and in fact itself was positive. So how can you say the market is bad? Well, of course, if you look at it this way, it is better, it is positive, but do you notice that it's actually lowering? That's the problem. Now, did the market really goes up because of good earnings? We all know that it wasn't. So what actually stimulated this was because of some creative accounting. And to me, it's all right. Very important is this: if the thing is this, if the Federal Reserve really want to really defeat inflation, they shouldn't expect the economy to do well at the same time. It's not possible, because when you are trying to curb inflation, you need to reduce business activity. So if the business activity is doing well, the GDP is growing, that means that something is wrong, right? And of course, if you look carefully down, the PCE price index increases 3.9% with an increase of 4.7%. All right, this is something that is actually growing. So I believe that if crude oil energy prices are going to go higher, we may see a bigger problem. Alright, so with that, we're going to move into this right now. You can see Intel didn't do well last week. In fact, Intel, the share price have been coming down. It's a very big reflection of the current situation. And they say that it's because that they are having a bit of a problem with the inventories. And of course, demand has went down, PC weakness. So all these speaks volume. And I think that there's more to go. So the thing is that I want to cover today is the real estate thing. Now, the Euro estate shows that the home prices is down by 11.3% from peak in June, okay? Now, this is the latest report on 21st of January, and you can see right now the Bay Area house have fallen by 25% since April peak. Now, of course, on one side, it means that the Federal Reserve interest rate hiking is showing its impact. But the problem is this: imagine people who've been buying itself, then what happened? They will have to pay through their nose, because when prices goes down, their mortgage cost increases. That is a big problem, because why? That means the bank go after them, because once a mortgage value decreases in prices, the buyer will have to put on more. And of course, if the cost increase, that will be a big problem. And that's the reason why buyers are now cancellating. Their cancellation rate has gone up. They're cancelling all their buying of the properties. All right, this is no joking matter. So let me explain to you why are they canceling. Now take a look at this. Just last year, 2022, right? 2020, sorry, my bad. Let's say 2021 January, the mortgage rate was at about 2%, okay, at 2.67%. So now where are we? We are right here right now at 6.13%. So simply put itself, the cost of borrowing has increased by double. Now the problem is that if the property prices is still going up, you can still talk about it. But if the property prices is coming down, we have a big problem. And you can see right now that every time when we hit somewhere near this area here, we are not too far away from the word recession. So if recession do kick in, people lose jobs and they couldn't finance their property prices, what will happen? This is what happened. Let's take a look here, guys. This is no joking matter, right? Let's go. So you can see right now, right, December was a very difficult month for buyers, and because of the limited inventory and high mortgage rate, okay? And however, they expect sales to go higher because they expect the mortgage rate to decline. Now, this is really a big joke here. It's not really possible, because now let's take a look at the current mortgage rate right now, okay, guys? The current mortgage rate as of today, all right, as of today is actually at 6.44%, okay? 6.44%. So think about this. If 2 years ago you bought a property for $400,000 and your interest rate is at 2.75%, all right, if you pay on monthly schedule, you need to pay up to $1,633 per month. Okay, so not too bad, right? Still manageable. But when your rate is at 6.25%, which is right now, your monthly cost will be at about $2,463, which basically increases by almost $900. And think about this: if the mortgage rate increases because the interest rate increases, then this will become $3,000. My God, that will be really a person's monthly salary. So think about this right now. What will happen? This is not going to end well, guys. So with that, you can see very clearly right now that the current 10-year yield versus 2-year yield, we are at the very inverted area, and every time when the inversion come in, you can see that almost evidently that the US unemployment rate will start to go higher. This is where recession kicks in. So which means that if unemployment kicks in, lesser people have the facility or resources to go and pay back their loans. This is going to end very badly, and that is the reason why I'm very concerned right now. And even from this guy Nick, who is the mouthpiece of Federal Reserve from Wall Street Journal, says that the stubbornly high inflation is finally easing as supply chain disruption faded and interest rate at 15 years high put on a brake on demand. But federal officials have voiced unease that any deflation might be short-lived because labor market are so tight right now. So if the things have to open up itself, right, that means that more and more people are losing their job. I just wonder what will happen next. So with that information, let's look at the money supply issue right now. Now take a look, guys. The current money supply right now is back to the flat area, as you can see right now. It happened before in 1993, 1949, and of course 1921 and 1938. Okay, there were three good times when all these things happened. But what actually happened? That means that the money supply in the market have reduced, right? So when that all reduced, what happened? Well, let's take a look, guys. This is not a good thing. Let's take a look here. When the thing happened, we saw in 1929, after the money supply has gone off, right, over here, the stock market crashed. Okay, that was bad. In 1937, that was where the money supply went down with the recession of 1937, 1938. And then in 1990, we have the recession once again. In 2010, we have the recession, a flash crash, in fact. And after that, we have the stock market coming down more than 21%. So all this information tells you that you don't want to be involved at the point right now, because this is going to repeat. So for the last 100 years, all these show that when the money supply comes down, it will not be good for the equity market, and this has been proven. So guys, be very, very careful. But the thing is that arguably many people are saying that the soft landing is going to happen in US. But let me bring you back all the way to 2007. Okay, in 2007, in the IMF survey, they said that soft landing is happening for USA. Things are going to be fine. We're going to go at 3%, exactly what's happening right now. But they do know that the housing market will get worse. They know it, but they don't emphasize on it. And after that, the Federal Reserve chairman at the time came in, was Ben Bernanke. He says that, right, the Congress has an upbeat view of the US economy, and even though employment is at the low end right now, things is going to be fine and it could be a soft landing. Remember guys, I was there around and I was sharing this with every one of you, and of course the analyst was all saying that no worries, things are good. And even that time, Michael Harnett, right, also says that things are going to be okay. It's going to be practically strong. Nothing going to be bad. It's going to be good. So think about this right now. We all know that what happened after that in 2008. All these are what we are seeing today repeating right in front of our eyes. So guys, take a look at this S&P chart right now. I want to show you something very interesting. Alright, you can see right here right now that the S&P 500 is basically consolidating at like a triangle shape, the pendulum, and it's waiting to explode, right? So of course, from a YouTuber or sharing this very nice chart here to show you that what technically can happen. Either we see a breakout over here, or we may see an upside or downside, but usually uptrend, we should see a breakout. So of course, there is these three views can really all happen. But from this look at it right now, I believe that we are actually right here. Now this is another analyst. They use a 150-day moving average to calculate this. I use it and I want to share this with you because I think that we are somewhere near there whereby the market is shaking right now, and very soon we'll go into a trending positioning. All right, trending, yeah. So all these information is coming out. Don't you find today's incredible? So take a look. This is the S&P 500 over the last 2 years. Now you can see that the market is performing a downward trend, and of course the last time we see a low that is significant is about 2,250, and this level was something that what Michael Burry also mentioned indirectly. And if you look back in 2008, we are seeing the same thing happening once again with a parabolic upside we saw, and then we have a downtrend, very systematic. And of course, if the market really do what had been done in 2008 and 2009, the S&P dropped all the way down to about 780 level, and that was from 1,230. So that means that the market has dropped at least about 30 to 40%, right? 30 to 40% drop. And if this is going to happen, if the market drop another 30%, it is possible to see the S&P 500 dropping down to somewhere about this area here. Anything lower than that itself, the market must drop by at least 40 to 50%. Well, that will be incredible. So what do you think, guys? Can this all happen? Let me know here itself, and we see that you guys really understand what I'm trying to say here. This is really crazy stuff. Okay, so let's just continue and take a look here. Now this is something that I done over the weekend. You can see, right, this is back in 2007 and 8 inside there. We can see that the market stabilized beautifully at the MA 150. Okay, we have a strong consolidation here, and then when the market started to come down with the first wave, then we had the market try to recover but fail, and then the market touches it and fail precisely, created a new low and a new low for 2 times to 3 times, rejected, go up again, tries again to stay afloat but fail, rejection was there, and then the market came down for the 4th time before collapsing all the way down, right? Okay, so that was what happened back in 2008 and 9. So watch this right now, guys. We have almost an identical thing happening for 2022 to 2023. So you can see that the market did a same thing again, and then we have a breakout, and the market purposely touched the line. It's exactly the same, the last drawing, and then we have 3 rounds of lower cycle, and then what we have right now. The only thing that's different, we have one more huge chunk of consolidation around this area because the market refused to drop. But if the market starts to break below the MA 250, then we're going to see the S&P dropping down all the way to 3,500 at least. So where we are right now, 4,000 level to 305 is about 500 points. It is really possible. All right, so traders, you need to be very careful on what I shared today. So that you can see right now on the S&P 500, we can see now on the longer scale that it's been trying to stay above the 38.16 technical level. This is a spot market, so every time it's trying to stay above is fine, but once it break below, we have a problem. The Fibonacci is looking very fine right now, holding the market. So only if the market fail, then of course the next wave will bring it down all the way down to this particular level, that 3510, make it simple. So it is possible that the S&P 500 can come down to 3510 in the near term. But of course, if things get scary and get crazy, who knows, the market may really drop all the way down to the 2,000 point mark, which I think that we may see something even crazier. But of course, if that actually really happened, that will be the best time to buy heavily into the market and let the market decide. All right, so something to take note. You really need to take note of this. All right, guys. So this is something that you need to take note of. All right, so this is the chart to take a screenshot right now. I'm doing right now for myself because I really think that things is gonna happen, and I don't want you guys to miss it too. Okay, so let's look at the charts for today and see what we have for you installed for today. Let's bring the chart in right now. Okay, here we go. All right, so first of all, we have Hong Kong coming down continuously, and I've been telling you guys Hong Kong is a very important indicator. If Hong Kong is taking profit, guys, you need to be very careful, because usually any crisis in the market, Hong Kong will be the first market, will take profit first and followed by the US market. And from the way the Hong Kong is coming down right now, I think that this 21,422 can be traded in the near term. So traders watch this very closely. All right. Okay, so let's just look at the what we have right here, which is my KFC level. Let me bring it to you. Okay, hold on a minute. Okay, here we go. Now the KFC level for the Dow Jones is trading at 32,000. Is at trading at 32,277. Thing. Wait a minute. Yeah, this is the Dow Jones KFC level, 32,000. Okay, I think there's something wrong over here. 32,2779. Okay, so as long as the market stays above this line here itself, things will be okay. So let's just watch this closely. Wait a minute, there's something wrong here. Did I get it wrong? Okay, here we go. I think that's why I was thinking something is wrong in the chart. Okay, the right Dow Jones KFC level is 33,003. Oh my god. Okay, so this is the level here. You can see right now that this was where it consolidated for a while. Then we see a recovery all the way up, right? And then recently it pulled back down beautifully, and magically it just stopped here, guys. It just stopped here and then recover once again. So you can see that that's why my KFC is such a powerful indicator. And if you have that, you will know what to do. And do know my KFC have expanded to 10 more markets recently. Oh my god, this is gonna be a big one, guys. Okay, so anyway, that is my first view here. So watch out for this. 33,031 is a very important support level. I think the market may pull back once again. Yeah, so watch out for this. Let me take this away to make sure that it goes down to here. All right, for the Nasdaq, we can see we are very, very near to the KFC level, which is trading at 11,774. Now we can see right here how precise it went. It came down first, rebounded, pierced below, rebounded. So that's why the market perched up right here, right? So why the market goes up? Because this is a very strong technical trend line right here. And now it's coming down. So the market has to stay above this point. If not, the selling can bring it down all the way. And I think it can bring it down all the way to this point here. This is the next KFC, this is the next KCB level. The one that's over here should be supported somewhere around this area here. Okay, so that is something to warn you guys. Be extremely careful. Hang Seng KFC level is pretty far away, so but now it has broke below, it's pumped up and pulled back. So all the gap up has been done, close up already. So we need to be very, very careful. And for gold prices, gold is really the 1921 support level is very strong. As long as gold stays above 1921, it's okay. But if it goes below 1921 and close below 1905 will be the first profit level. I think gold will come down. I mean, I've been calling for sell in gold. I think it will come down to here, and that will be something that I'll watch for the direction. Yep. Okay, so that is the 4 market KFC level. And of course, if you look at the Dow Jones for today, you can see very clearly the Dow Jones is showing signs of problem. The KSI and KRW both had turned red, so that's why the red arrow pop up. This is a sign that some profit taking expected. Now today, the pivot 1 and pivot 2 is between the two areas. So MLP 33,827 is forcing the market downwards. 33,651 MA30 will be the first support. And if the market loses 33,580, then of course I strongly believe 33,382 will be next. All right. Now the Nasdaq, as you can see, is doing a CCYR beautifully, and today it's going to trade down to 11,854. KSI and the KRW both are still positive, but the strength is seemingly losing right now. And for the S&P 500, you can see that recently with a buy call in the market that pushes the S&P higher, but you can see S&P heavily resisted at the KCB at 4073. So for today itself, as long as it stay below MLP, I believe that 13989 could be the first support, because that is a pivot too. Okay, so traders, watch out for that. And for Nikkei, let's take a look right now. Nikkei has a buy signal because of KSI and Cyan were doing at the same time, but it came as a doji. So that means that we have one doji, two dojis. Today, by right, should be no doji. But the thing is this, if the market do decide to go higher, 27,641 will be the first resistance. But the downside support will be 27,251, which I feel that the Nikkei will be coming down to this area instead. Okay, and of course for Hang Seng, you can see on the day chart, it's very clear it has came down below, rejected at 21,197. You look at the 5-minute chart right now, you can see a very quick one here. You can see that the market opens this morning ding dong around this, but once it basically loses 22,197, it's going to trade down lower. So likelihood it will test 21,900, right? KSI all the way has been read. So even though the price went up, the market is a sell. I've been telling people this, when the price goes up, the KSI is red, it's a sell, it's never a buy. So all these are very powerful TA that you don't see in the mainstream media. Alright, so what we have right now over here are done with the US side. Let's look at crude oil. Crude oil has pulled back. I told you guys crude oil will likely pull back once it goes below the BNB support level. The BNB support level is about $78. So as long as it loses that, it will come down to 75.50. So I'm looking at 75.40. Sorry, I think that if we can get crude at 75.40, be good. 74, 70 it will be better. 71 will be the best of the best. Okay, so traders, watch out for this. KSI has turned red. All right, now for the Forex market, the dollar yen itself is moving sideways with a BNB RL level at 13060. So traders, you just need to watch out for here at the moment. KSI is red still, that means selling pressure is still there, but KRW is cyan. So if you ask me, right, if any chance if the market pushes above the BNB RL, we can see dollar yen going up to 131.94 and then 132.45. I still think that the dollar will go up in the near term. I know they've been calling for this for some time, but if you look carefully right now, the KSI and the KRW shows that the market is still buying for the boys, but the British is coming down. So if you ask me, right, if let's say the US Federal Reserve is going to increase interest rate, definitely the dollar will be pumped up, and the alternate currency like this Euro pound will come down to 1.21 level, and of course Euro will also be coming down. Euro today has rejected the MLP and then it's coming down right now. So the support level you'll be standing around will be about this point at 1.08, which is now happening. So if the market goes down, 1.0772 will be the first target. All right, so this is the Forex sharing. Now let's look at the gold and silver market. Let's take a look right now. KCX, where are you? Okay, here we go. This is the US gold. Now gold is going to about this resistance at the new BNB and the support right here. And you can see that 1918 is a strong support. So if gold want to come down, you have to break 1918 to go down to 1888. KSI is green and no colors at the KCX means that the whole market is very bullish on gold. So if the only reason for gold to come down is because of panic, and if that's panic, that means you need to be very, very careful. Now silver is basically playing around these two BNB, RL and SL level, but again it's now resisted by MA30 and also supported by MLP. So if it breaks below 23.50, we may see some selling all the way to 22.93, but again there's no need to worry because this is a very strong market for silver, right? So silver itself both are strong indication. Okay, so we're done on silver. Let's look on Bitcoin and Ethereum to wrap it up. Now, Bitcoin basically went up all the way to 23,961. So I was wrong once again, but I don't mind being wrong because I'm still going to stick to my guns for what I'm seeing right now. And you can see over here, it's very clear. The market trying to stay above the BNB RL, but failed. So that means that it's going to go down to 22,200 again. If the KSI is red, I think that there is a chance to see this happening. So traders, you need to be very careful. And for Ethereum, the day before, we expect the Ethereum to go higher, but it failed, closed back down again. and now he's saying that we have to be very careful. We're trading below MLP and MA, so if the market breaks below, we can see the low end of it, and that could be 15,000, and it goes crazier, we can see even as low as 13,900, or even MA 200 at 13,000. Sorry, my bad, 1393 or 1379, so 1393 and 1379. All right, this is my bad itself. Okay, guys. So the KSI is red and the KCX turning having these blue bars. This is not a good sign. If you compare this with Bitcoin, right? Bitcoin doesn't have it. Okay. All right, guys. Hope you enjoyed this video. It's great time seeing you, it's a good time to be back online again. I hope you like this video. Please leave some comments in the comment box so that I know that you are listening and you really like this video. Thank you once again. This is Cal signing off. Bye bye.